Welcome to the Daily Business and Finance Show. Salesforce stumbles on Q1 sales, Tesla's mixed bag of praise and criticism, health insurers wobble after UnitedHealth CEO's Medicaid remarks. Disney stake sold by activist investor Nelson Peltz, ConocoPhillips' $22.5 billion Marathon Oil acquisition, Homeland Security tightens grip on Shine and Temu Customs brokers. Jamie Dimon warns of private credit market rupture fallout, speculations rise over Devon Energy bid in Marathon, ConocoPhillips deal and Costco Wholesale's Q3 earnings, what lies ahead? Stay tuned after this short ad break to delve deeper into these headlines. Shares in Salesforce experienced a near 11% decrease after the fiscal first quarter report and guidance did not meet anticipated targets. The enterprise software firm, despite generating an adjusted $2.44 per share on revenue of $9.13 billion, has projected earnings for the upcoming second quarter that fall beneath analyst predictions. Nevertheless, Salesforce continues to uphold its full-year forecast, with sales predicted to hit as high as $38 billion.
Tesla has initiated the construction of a factory in Shanghai, valued at $200 million. This marks their first battery plant outside the United States. The project has received commendation from China's state-controlled Xinhua news agency. This development occurs as Tesla encounters fresh rivalry in China's electric vehicle market from the Avatar 7, a collaborative venture between Changan and CATL. In other news, Marcy Frost, CEO of California Public Employees Retirement System, intends to challenge Elon Musk's compensation package worth $56 billion during a shareholder vote scheduled for June 12.
Stocks related to health insurance, such as those of UnitedHealth Group and Centene, experienced a decline after remarks made by Andrew Whitty, the CEO of UnitedHealth. Whitty hinted that it might take multiple quarters before states begin to provide sufficient premium rates for patients on Medicaid. This statement has stirred up the market, resulting in a drop in share prices.
Nelson Peltz, a prominent activist investor, has offloaded his complete share in the Walt Disney Company, yielding approximately $1 billion. This development comes on the heels of a recent unsuccessful proxy war with Disney. In this conflict, both Triumph Fund Management and Blackwell's Capital, associated with Peltz, were unable to secure their directorial candidate's election to the board. This divestment signifies the conclusion of Peltz's efforts to sway the governance and strategy of this entertainment behemoth.
ConocoPhillips has plans to purchase Marathon Oil through an all-stock transaction. The deal's worth is estimated at $22.5 billion, which includes $5.4 billion of net debt. Shareholders of Marathon will be given a premium of 14.7% on their shares as part of this agreement. This acquisition will contribute an additional 2 billion barrels of resource to the portfolio of ConocoPhillips and is projected to yield around $500 million in cost and capital synergies within the initial year.
Overseas e-commerce companies, including Temu and Shine, might be on the verge of losing a loophole that currently allows them to bypass U.S. customs. This is due to regulatory authorities intensifying their scrutiny on organizations that enable international shipments. The U.S. Customs and Border Protection Agency has put a halt to Seco Logistics' participation in the Entry Type 86 program. This program provides fast-tracked entry for shipments valued at less than $800. Such an action could potentially disrupt Shine's intentions of becoming a publicly traded company in the United States.
Chief Executive Officer of J.P. Morgan, Jamie Dimon, has issued a warning about possible complications in the private credit sector, which is valued at over $1 trillion. Although he does not foresee any widespread issues, he predicts difficulties arising from illiquid products and untried tactics employed by certain lenders. The Federal Reserve has observed that this industry has seen significant growth recently, with its value nearing $1.7 trillion.
ConocoPhillips is proposing an all-stock acquisition of Marathon Oil, valued at $22.5 billion. This has led to speculation that Devon Energy may present a competing bid. The rumors have been fueled by reports that Devon Energy is on the hunt for major acquisitions in U.S. shale, and both companies operate in similar regions. The deal is anticipated to be finalized in the fourth quarter and has already resulted in an 11.5% increase in Marathon stock value, while ConocoPhillips stock experienced a slight dip.
Forecasts suggest that Costco Wholesale will see an 8.2% increase in earnings per share, along with an 8.1% rise in revenue, amounting to $58 billion for the third quarter. Despite elevated prices, the resilience of Costco's extensive customer base and consistent membership revenue is evident. The company's shares have seen nearly a 23% growth this year, surpassing the S&P 500 index, which has risen just over 11%. Analysts are predicting sustained growth for Costco due to factors such as new member acquisition, increased footfall, and the opening of new stores. Thank you for tuning into the Daily Business and Finance Show. Stay informed, stay invested. Until next time, keep aiming for those financial stars. I'm Montgomery Jones.
And I'm Amalia Dupre. Until we meet again tomorrow, have a great rest of your day or night. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.